If we want to trade or buy crypto, then technical analysis and indicators will undoubtedly be what we rely on for our trading signals. But what signals should we actually be using to help us trade, pick the right levels to enter our trades at, and also give us the best chance of getting in and out with profits? In this video, I have 5 indicators and tools we can use to get started and give us an edge. Hey guys, James here. If you want to trade crypto, you'll need these indicators to confirm your trading and entry levels. Without these indicators, you'll be in the dark when placing your trades, but using these will ensure you don't get in at the wrong time and with no idea how much risk you're actually taking. We can then use these to limit our downside and our risk. Timestamps are in the description, and so are links to the resources discussed in this video. The first indicator we are going to look at is the moving average. There's a few different types of these. You have a simple moving average and exponential moving average. And actually they're not too different, especially when you get to the longer time frames. But when you get more advanced, you might want to use one or the other. We're just going to be using a simple moving average here. This is really the first indicator that anyone will use when they get started looking at charts. But essentially what a moving average is it takes the prices over a given period. So that actually the period does change depending on what you choose. It's really, really simple, and it just smooths out the chart. So I've got an example here. Let's say we have 3 days. We have a price of 50.78, a price of 48.78, and then a price of 51.80. Plus those together and divide by the number of days, which is 3. So the moving average is 50.45, and that is plotted on the graph for the amount of time that you're looking at. So let's come to the graph right here, and you'll see that I'm on the 1 day. So you can really clearly see this. I'm on a 1 day chart. So each one of these candlesticks represents 1 day in time. And then usually it's the closing price of that candlestick that will go down as the price for that time period. And then that is the price that is added to other time periods and plotted against the number of time periods that you have. So in this case, it's quite a lot. So you can change this. We're going to put it onto the chart right here. So we come up to technical indicators. I'm using Binance, by the way, if this doesn't look familiar to you. All links in description on what I'm using in this video. Binance is the biggest crypto exchange though, so that's why I'm using it. We're going to come over to MA like this, and it says moving average right here. So you can just click that to add it to the chart, and you can see we've added it right here. I've got 2 on there already, but just to show you, we can come over and format, click on format right here, change the color, and then change the input. So really important, this input right here, as you can see, it says length. That's the amount of periods that you actually want to go by. So I'm just going to put in maybe a 75 period moving average. That's good for me. So I'm just going to close this, press OK. And then you can see the purple line right here is the 75 period moving average. I also have a yellow line, which is the 50 period, and then the white line, which is a 200 period. Obviously, the shorter your time periods, that means the more closely it will actually match the actual prices on the graph. But you can see right here, the 200 day, it's much more smoothed out. And so shorter movements in the price up and down, obviously it's not going to track that as closely. So it gives you a more smoothed out number of periods. Now, why would we use this? Well, as you can see here, using moving averages to identify trends is really important, and also areas of value. So when you're trading, you're looking at areas of value and trends. Something that a lot of people do is use the 200-day moving average as a long-term trend indicator. What we're seeing right now is actually the BTC chart has seen a massive sell-off, and it actually came under the 200-day. And what you'll see is that traders actually push the price back up right here, thinking that the 200-day may actually act as some sort of support for the price. It didn't, it broke down. And so this is actually a very difficult chart to trade right now, but this is technical analysis, and sometimes it doesn't work. You can see previously really how the price of Bitcoin for the short-term trend was really bouncing off the 50-day moving average, which is this yellow line right here. So as you can see, the price comes and bounces off the 50-day once, not really here, but almost, definitely around here. And then as we move on, it actually did bounce around here as well, moved down, and then actually the 50-day was support, but it turned into resistance. To illustrate this further, what we can see here, look at the 200-day moving average, the white line, definitely an uptrend. So we know that this asset is in an uptrend. We can actually also see from the 50-day really moving upwards as well, and actually getting further and further away from the 200-day, meaning that the velocity of the move is actually increasing over time. So this is just a super bullish chart that cannot last forever though, and so we do see a slight breakdown. This is also based off news and events as well. This is a very difficult area to trade because prices are moving right through these moving averages. And so yes, you can trade these very volatile moves, but sometimes you may just want to come into cash and just say, I'm actually going to wait until the price is a little bit more predictable overall. What does predictable mean? Well, let's look at this specific chart, but maybe a few weeks earlier. This is a very predictable chart. You can see it really does bounce off this 50-day moving average, telling us that the short term is really, really predictable and also in the direction over and over again. So you can see right here, this is an area of value. It comes to the 50-day moving average and then bounces off. Here is an area of value. Again, the price reverts to the 50-day moving average. Is the trend reversing? No, it isn't. It bounces off that once more. Again, a trading opportunity if you're going long here as well. It doesn't even get to the 50-day, a super bullish move, but it does revert and then bounce off again. And then here once more, reverts to the 50-day and then bounces off once more. There are also areas that you may not want to trade, and you can use the moving average to do this as well. This is just so far away from the 50-day moving average. What you're seeing is a huge breakout of the price. And again, if you're a trader, very difficult to predict what is going to happen after this. Maybe you don't want to trade here and you want to wait for it to revert to the 50-day moving average. Again, really just a breakout here and a third breakout. Trading when prices move this far away from moving averages can be difficult. So you may want to choose to trade when they revert back to that moving average and see that as an area of value and see that as a potential in point into a long trade in this instance anyway. And just to ram home the point of the moving average, like we've seen, it's the same chart, but we're going back to this breakdown. So we have these areas of value that you might want to trade. So you're looking for the next time that the price reverts to the 50-day, and it's right here. Is it going to bounce off it again? Are we continuing in the move? You can see that it just doesn't. It actually breaks down through the 50-day. As a trader, it's really simple to say, look, this move is broken down. It is not bouncing off the 50-day. Let me just regroup and see what happens to the price. And you can see the 50-day moves from support to resistance. And this means that the move may well possibly be breaking down. You may not want to go long here. So this is definitely something to watch out for. Really simple. The simplest thing to do is use the moving average to see areas of value and areas where you may or may not want to get in. Next up is crypto flows and indicators. This is specific for cryptocurrency. So all the other indicators that I'm talking about, you can use these with stocks and Forex and pretty much any other asset class that you can go and trade. For crypto specifically, there are some things that we can look at that actually really give us an idea of how flows and asset flows and people are sending cryptos around to exchanges. This is really going to tell us about longer term trends, maybe medium term trends. We can have access to all of this because of the way that cryptocurrency runs. So some indicators that we can look at are, for example, exchange inflows. So as we know, crypto can actually be held on an exchange, but it can also be held in cold storage, basically taking that crypto out of the market and putting it in safekeeping. If actually people send that back to an exchange, why are they doing that? You would suggest that if someone moves an asset onto an exchange, it's because they want to exchange it, trade it. If they have it from cold storage, put it onto an exchange, you would suggest that they're trying to sell some of their crypto. There really is no other reason to put crypto from cold storage, essentially in a safe, onto an exchange unless you actually want to go and sell it, because there's no other real reason to do that. So let's come to something like Crypto Quant. This is a completely free service. I think they do have an upgrade pricing plan where you get some more data. We have a lot of free information here, and I'm sure there are other websites that do this sort of info as well, but you can have a look at this one if you want. The first bit of information we can look at is exchange reserves, and this means how much crypto is actually on all of the crypto exchanges. This is obviously very important because if people are withdrawing their assets from exchanges, it means they're really not wanting to trade them. And so if crypto is withdrawn and people aren't trading them, then potentially if there are buyers in the market, then the price may get a lot of support because there are fewer sellers than people wanting to come in and buy. And you can actually see a correlation here. So the orange line is assets moving out of exchanges into cold storage, and you can see that a lot of Bitcoin was on exchanges right here, and then as we move down, obviously less and less Bitcoin is on exchanges. It just so happens that that is correlating with the price rise right here. But what you can see usually is that when assets do come onto an exchange, it sometimes precedes a dump. So you can see that right here. We have a lot moving back onto the exchange, and then you saw a price dump around here, we have another inflow to exchanges. Again, that does precede a price dump. And then obviously we have a huge amount coming into exchanges right here. So it goes from, around 10, 11K to 20K. So the amount on exchanges has doubled. And then you can see, obviously, that is because people are moving their Bitcoin onto exchanges in order to sell it. And we have this huge dump here. If people are putting more and more Bitcoin onto exchanges, it means that there is a lot of supply, and potentially you're not going to get price rises because there's just so much supply available that is going to feed those buyers. The next indicator is leverage ratio. We can come to market indicators right here. Leverage is, of course, very important because leverage really suggests that traders are getting a bit euphoric. When traders take leverage, really what they're doing is borrowing money to fund large positions, and they're usually betting on price rises or possibly on price falls. But when there is a lot of leverage, that really can precede very volatile markets. Another indicator we can use is futures open interest and also liquidation. So we're going to come to market data right here and then look at all exchanges. And it's very, very good data. There's a lot I could go through, but let's just look at futures open interest and liquidation. So the liquidations are right here. And what you can see is that when there are very large moves in the price, you'll get liquidations. So as you can see, with a very sharp move to the downside, you get long liquidations. People that have bet on the price going up, they're also leveraged and they just get wiped out. And so you can see a huge amount of liquidations right here. A liquidation is when you are told by the exchange you don't have enough money on account to fund your position. We're going to sell it for you, and that's it. So you may make a loss, and it's just a rolling stone effect. One person gets liquidated, you get a dump in the price, another person has their position liquidated, another dump, another sell, and it just carries on and on and on. Minor flows are also something that you will not get in stocks or Forex or anything else. How much Bitcoin is moving to exchanges from miners. Miners mine the Bitcoin, of course, and when they want to make their money or cash in their positions, they will obviously have to move that Bitcoin from their wallets onto exchanges to sell it. And so if you see a huge inflow to an exchange from mining pools, that will often precede a price dump. So you can see here that actually ant pool outflow, a huge amount of outflow from wallets. Obviously they're selling as part of this. And then we can go to other pools, for example, Poolin. They absolutely dumped a load of Bitcoin on the market right here during this dump. So they're obviously piling in and selling theirs as well. We also have F2 Pool, renowned for dumping Bitcoin on the market. And you can see a few occasions where they have actually put a lot of Bitcoin onto the market and sold it. They obviously dumped a huge load of Bitcoin right here, and the price did come off when they were dumping it, and they did put a load of Bitcoin on the market right up here, again preceding this price fall as well. A lot of information on websites like this. You can see inflows and outflows to exchanges, and it could be used to predict possible moves in the Bitcoin price and longer term trends. Next up, back to an indicator that can be used across markets, Forex, stocks, crypto. You can all use this one, average true range, or ATR. This tells us the largest possible move of an asset during the time period that we've chosen. So it essentially tells us the volatility of the asset for that time period. And this is really important to know, because if you don't know how much an asset can possibly move during a time period, then how do you know where to put your stop loss or your take profit, or how do you know how much risk you're actually taking? Unless you know how much it can move given a time period, then we really don't know much about putting in any limit orders or anything like that. So we can use the ATR to set our stop loss, but more than that, we can use the ATR to even say, this trade is too risky for me, it can move too much and I'm not comfortable with that risk. Or you can say, actually, I'm comfortable with this level of risk for the time period and I'm happy to go in. But we can use the ATR to identify a stop loss. So let's come to the chart and I will put this in for us. We can come up to indicators and then just search for ATR. It should be up there. So average true range, I've put that on the chart right now and it's down here. So let's just change this. I'm going to keep it on 14. That's good for me. And then just make this wider so we can actually see it. And here it is. So let's reset the chart and it shows us exactly how much Bitcoin can move in a day, or you can change it to 4 hours, 1 hour, whatever. So let's just change it down to 1 hour from 1 day. We can see that on a daily basis, Bitcoin can move as much as $4,000 in a day. Now, obviously that's around about, let's say 10% or something like that if the price is 4,000, and you can see the ATR is rising. Why is the ATR rising? You can see the daily volatility is increasing. The amount each day that possibly the price is moving is going up. You can see a huge move around here and huge moves here. And so the possible move in a day will obviously rise. When there is low volatility, so you're not getting a lot of daily price movements, the ATR will obviously fall, and it can be that for any asset. But let's go to 4 hours and you'll see a difference right here. So instead of it being around 4 or 5,000, you can see that's halved now. Why is that? It is much easier for an asset to move 100% in a year than it is for it to move 100% in a day, especially if it's a big asset. So obviously, if you go to a shorter time period, the most it can move is less. And so we're seeing 2,000, we can go back to the 1 day, and then it's around 4 to 5,000 even. So the longer the time period, the higher the ATR could be. Not necessarily, it depends on the asset, of course. But what we can do is actually come and trade right now. So we can just go to our order book right here and we can input a limit order. Let's say just we want to go long. So we'll try a limit order of 37,630 like this. And then you might want to put a stop loss in. So let's say I just put that limit order in and press a buy. Where is my stop loss going to be? Well, we can come down to the ATR, and I know that the ATR is around 5,000 at the moment. So potentially today it could move 5,000. So you would put your stop loss at 32,630. If that is too much risk for you to take, then just don't trade and wait for the asset to become a little less volatile like it has been back here, where the ATR is all the way down at 2,876. So that would be completely different. It just so happens that Bitcoin has had a very volatile move recently, and so the ATR shoots up. You can look at other assets, stocks and Forex with much lower ATRs, essentially the daily volatility or the time period volatility. Use one ATR as a stop loss potentially to limit your risk to the downside. Next up, another ubiquitous indicator is the MACD, and this is known as the Moving Average Convergence Divergence. A bit of a mouthful, but it's actually quite a simple indicator. It is a trend following indicator, so it will tell us what the price is doing, and we can use this for potential entries. Something I should mention about the MACD, I personally think it's better for day trading rather than longer term entry points. When you're trading longer term, the MACD for me doesn't really do too much. You really do need those shorter time scales, and we can have a look at an example. But all the MACD does is takes the 26 period exponential moving average, so we know what moving averages are now, and then it subtracts that from the 12 period EMA. That gives us the MACD, or the Moving Average Convergence Divergence. And then what you do is take a 9 period EMA of the MACD, and that gives you a signal line. It sounds way more complicated than it is. All it's telling us is, what is the price doing and what is the trend going to be? Are we seeing some reversals in the trend? And that can potentially lead us to an entry signal. Let's look at the MACD then on an example. So you can see right here, I have the MACD down here. I'm just going to go to the chart and show you how to put this on the chart. So you can come up to your technical indicators, then just search for MACD. It's right there. You can click it, it comes down on the bottom, and then you can change the colors as you want. But you have 2 lines and 1 histogram here. Histogram tells you what's happening with the MACD line versus the signal line. So I've actually got the MACD line, as you can see, in white, and the signal line in red. And the histogram just tells us if the MACD is actually passing over or under its signal line. So it doesn't tell you anything that's not happening with the other 2 lines, but it just gives you a more visual representation of what's actually happening. When the histogram is basically nothing right here, that means that the signal line and the MACD line are together. If we zoom in right here, you can see that when they are together, the histogram doesn't show anything. When they are far apart, the histogram shows us how far apart they actually are. What you want to do is really see when the MACD is moving through its signal line, and that potentially could lead us into an entry signal. So what people do is wait for the MACD and signal line to be on the bottom half of the equation. So you have the 0 line in the middle right here, and that means that everything is at equilibrium. When the MACD and signal line are in the bottom half, that's potentially showing us that the price of the asset is potentially oversold in comparison to the previous prices that it has been. When the MACD and signal line are above the 0 line, it's telling us that the price is quite high and overbought in comparison to previous prices. One way to trade the MACD is to wait for the MACD line to cross through its signal line, and you see that right here. So we see the histogram is showing us nothing. It's going from underneath the signal line. It crosses through right here, and we know that thanks to the histogram, and also it actually happens right here. And this could be a potential entry point for us. What traders try and do with the MACD is wait until the MACD is crossing through and hopefully ride that move up over into the zero line or even above. And that would obviously be a price move to the upside. So you can see right here it happens. If you got into a trade around this level, thanks to the MACD moving through the signal line, that would be a long entry trigger, hopefully moving up. You could go in here. Let's say we set a stop loss at 1 ATR away, which would potentially be down here. So that's our risk. And then what we want to do is ride the MACD up through the zero line and up into a bullish position. That would have been this move right here, and around this level would have been your exit. Doesn't happen every time like this. Again, this is a cherry picked. It is a common day trading strategy that people will use, waiting for the MACD to cross through the signal line from the bearish portion into the bullish portion, and that's pretty much the move done. Next up, we're going to be looking at a few of the smaller indicators that I will definitely have a look at before trading. We have correlation, performance metrics, also rate of change, which is actually a really good indicator to maybe look at what assets are actually performing well over time. Usually assets that perform well over a long period, let's say 6 months to a year, they do that for a reason. Yes, you can get some assets, especially in cryptocurrency, that do well for a few days, for a few weeks, over a year or so. It tends to be that the better projects, the better long-term fundamental projects actually outperform. I'm going to use token metrics for this because it is just an easy way to look at this, but a lot of these indicators you can use on TradingView or on Binance or whatever trading system that you're using. So I'm just going to come to token metrics just to show you it all in one space. So I'm going to come to Ethereum. So this is really every single indicator that we can have a look at all in one spot. So I'm going to come over to technical analysis right here, really just as a very easy, simple method to see if the technicals are already backing up to the fundamentals as well. So in the Ethereum screen, we can come right down to oscillators, EMAs, really important, trends, candlestick patterns. So as we can see here, now there's been a huge sell-off in crypto markets. So everything is going to look bearish, neutral, red to the downside, but potentially for people with a longer term outlook, could be a buying opportunity. People just actually want to dollar cost average into these things. What are we looking at? EMAs, we know what moving averages are now, 9, 20, 50, all together. So instead of showing it on a chart, it will essentially just give you an outlook. Bearish, neutral, bearish. This doesn't necessarily mean that you shouldn't trade it. Essentially, it just tells you that the price now in correlation to prices over these time periods is much lower. It doesn't mean that it's a bad thing. It could potentially be a buying opportunity for some people. Many other indicators that we can use are the relative strength index. This is a trend indicator showing us how strong a trend and a move is now comparatively to before. We also have the MACD, like I just showed you. Again, instead of having it on a chart, it just tells you exactly what that would be in comparison to previous prices. We have some oscillators on here, and we also have something called rate of change, which I really like. It's called ROC. It essentially tells you how strong the price move of an asset is over a much longer period, and this is still bullish. Why is that? Well, if we look at Ethereum over a longer time period, even though it's had this huge monumental step down recently, it is still incredibly up on what it has been historically. Prices here around 340, even up here 600. We're now at 2,500. So historically, we are still in massive bullish territory. And even though we had a really extraordinary move to the upside, then an extraordinary move to the downside, wiping that all out, the longer term trend is undeniably still to the upside and extremely bullish, which is why it gives us an ROC value of bullish. ROC is a longer term indicator. We're talking maybe a year or so. You can actually change this on the chart. If you do want to put this on the chart, you don't want to use token metrics, come to this and just type in ROC, and then you can actually put it on there and change all of it yourself. So we'll look at that. We'll go to the format option, go to inputs, change this to what you want. This will give you an amount of periods. Change this to 52 right here, press OK. Then we go to the week chart. That will give us the rate of change in percentage terms of the asset over time. And you can see it has just been bullish overall. So the longer term trend is bullish, and that's what you can see here with ROC. I will put a link below in the description if you want to go ahead and use it. You can see some of the offers, including I think a $1.99 trial. But like I said, if you don't want to do that, you can look at these indicators on charts like this with Binance, but you will have to do a little bit more work. So when it comes to indicators, these can be used to give you levels of entry and also spot trends over time. It changes per indicator. Some are longer term, some are medium, some are short term. You can use them for longer term trends and then really dial them in and set your entry points when you're actually going ahead and putting in a trade. Check out the resources I mentioned in this video in the description alongside some other helpful videos that I will put in there. Do subscribe for daily helpful crypto content and I'll see you in the next one.